Welcome to another episode of Trends and Ideas. I'm your host, Brian Egley. Year to date, the US dollar is posting gains against the euro, British pound, and particularly the Japanese yen. Joining me to discuss the greenback's strength and how to play it is S&P Capital IQ global equity strategist Alec Young. Thanks for being here, Alec.
Great to be here, Brian.
Alec, let's start with some basics. What's driving the dollar higher?
Well, I think we got a variety of currencies that are weakening against the dollar, but I think the one common thread is really investor concern about the strength of these overseas economies and the likelihood that the central banks, whether it be in Tokyo or Brussels or in London, are going to have to increase the amount of quantitative easing and stimulus that they're pumping into their economies to kind of get growth going. And oftentimes that means increasing the money supply. And so it tends to put downward pressure on the currencies against the dollar.
Well, what are the portfolio implications for U.S. investors?
Well, one of the main ways that a stronger dollar affects U.S. investor portfolios is by diluting their international equity performance. So when U.S. investors invest in foreign stocks, they want to see foreign currencies going up against the dollar. What's happening this year, the dollar is going up against most of those foreign currencies. So what's happening is that while overseas markets are up in dollar terms, the MSCI EFA, which is a broad-based international equity benchmark, is up about 6% year to date. In local currency terms, it's up over 10. So that dollar strength is eating away a little bit at the returns that U.S. investors are enjoying in their international stock portfolios.
Are there ETFs or exchange-traded funds that allow investors to hedge the currency risks in their international stock portfolio?
Absolutely, and we'd recommend focusing on the Japanese market because that's where we're seeing the most volatility from a currency perspective in dollar yen. And Wisdom Tree has an ETF, ticker DXJ, that allows U.S. investors to own Japanese stocks that we think are going to continue to benefit from dramatic quantitative easing in the Bank of Japan. But by the same token, they're able to hedge away the currency risk associated with owning a falling yen.
Thanks, Alec.
Sure.
For more of Alec's ETF picks and views on the U.S. dollar, we encourage our MarketScope.com subscribers to read a related Trends and Ideas story on MarketScope Advisor. It's called How to Play a Stronger Dollar. Until next time, thanks for watching or listening. I'm Brian Egley for S&P Capital IQ.